Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, and we are at the 15th of June, 2023. And the time right now is about 6:07 p.m. Central Time. Now, please remember, Juneteenth. That's the new holiday. I got to remember this name. That is Monday. The stock markets are closed. You do have the futures markets, though, open in abbreviated sessions in a number of markets. Not every one of them will be open, but a number will be. Check with your broker. I've already sent to my clients the trading hours. If you don't have them, check. All right. I believe tomorrow's triple witching day, so be careful here. You want to be now making your move out of the June everything. I'm already in the Septembers, and by the way, I've now moved to the August and all these, the Septembers here, the new crop grain. So I've made my move completely in everything that had to be moved as I saw it. I've even moved in the soft commodities. I've moved to the SEPs, the August, the Indices, wherever it has to be. So I've done all that. Tomorrow's also, I believe, the last trading day in the June Bitcoin. It trades all the volumes in the June until it goes off the board, and then it moves right into the next month. So that's just the way that it works in that. What happened? All right. First, the European Central Bank, the tiger, came out. And I give Christine Lagarde, I have nothing but admiration. She doesn't miss a beat. Unlike Mr. Powell, who can deliver mixed messages. It's just the style of the two. It doesn't have anything more to do. But her style is that of a tiger. And she makes it known. I am not going to back off. Our battle's not done. Where, as Jay Powell will go, well, we have a ways to go here, and we haven't reached our goal. It's the mannerism of the deliveries. They say the same thing. It's the mannerism. She came out with a hike today, and she said, get ready for one right after that. Jay Powell came out and said, we are pausing. Forget the word skip. That is out of your vocabulary. Our designated vice chair should not use that word again. I think he got scolded yesterday. I went back and I looked at the recording. I'm pretty convinced I'm right on that. He didn't like that new term, and he didn't use it. We're not skipping. We're pausing. The market doesn't believe him. If you watch today, you can almost count on it the day after a Fed action. This is how it's been now for over a year. The Fed does an action within 48 hours. The market says they don't know what they're doing. They're not going to be able to accomplish that. They're not going to keep raising rates, and the market goes the other way. You have made up the whole loss now in just about every index to it. Now, there's really, if you break down the rallies and you go into what makes up the weighting of the stock indices, are there 10 stocks that have carried this whole thing? Probably. Your average portfolio is up, but not in the stellar gains of a NVIDIA, not in the stellar gains of a Tesla, Microsoft now. You take those away and you're into the hardcore companies. You're not getting gains like this. It's not happening. All right? So understand that. Don't get suckered in. This is called a mania. Nobody knows where it'll end, how high it'll go. I'm going to repeat. You buy these, where do you put a stop? What is your reason for that? Where will you stop you? How do you live with it? If you miss something, you miss it. It comes back and lets you in at another time when the emotions aren't so strong. Do you fade a market like this? Absolutely not. But you don't let it consume you. So if you're not in that, you turn your attention to things that are more or less tradable. Got it? If you can't do that, and I've been there. I know just what this does in the psychology. I wrote a book, The Psychology of Smart Trading, many decades ago. Sold, I think the first publication, Forbes bought 5,000 of them, and then it took off, and that was great. And I don't want to write any more books. I like doing my videos and that. It was a very difficult time. I did it with one of my good friends, and it was hard for us, but got it done and made some bucks on it. We were happy campers. But I learned, and these manias come about, and you have to really take yourself away from it. Otherwise, you get swept up. When I was tried trading in the pits, okay, and I did that, You know how hard it is, and you're going in. I know you're going to think shares. So I want to buy 100, and the guy next to me wants to sell 10,000. He's screaming that I'm trying to buy 100 or 1,000, and he's up to 20,000. Do you think you're doing your buying? I know you think you do. Believe me, it's a whole different world. That's why floor traders would come and go. I used to watch Chicago Bear players buy memberships at the exchange, and I go, here comes fresh money. He won't last. And they didn't. A couple did. You heard the Nigerian brothers. I know them real well. They've been on my TV shows. They made it. But for one Nigerian, there's 10 losers or way more, okay? It's not for everybody. Well, this isn't either. And it's that type of, it sucks you in. It's a mania. And you go, I'm missing it. If you missed it, you missed it. Learn to live with it. When you look at the S&P, this is a runaway. You're up 2.7% for the week. That's a lot. Now, I'm listening to people saying, from here, you're going to drop 5%. And they're giving all the reasons. Well, when you're up 2.7% this week, if you drop 5%, who the hell cares? That's the reality. So the bears have no real argument here. Don't get caught up in the bear thinking. They're looking for their retracement of 5%, where you're gaining dramatically each day. Today, well, this isn't today. Let's go to today. I got to come back one. Here we go. You're up 1.19%. You were pretty flat the day before, but the day before that you were up 0.66, so now you're up almost 2%. You want me to keep going? So the guy that's talking that 5%, and that's the point I'm trying to make for you. Who cares? It doesn't matter. The market has made a big time move. The sell may go away, people. Have you heard it on TV anywhere? Because they're buried. They're back here in their shorts. You didn't hear me say that this year. Gone. Didn't work. Once you took out the May highs and you stayed over them for a little bit, it's not valid. If Yale Hirsch were alive, we'd talk about that because he devised that theory. And there are ways that you recognize it's not there because I used to ask him that years ago, 30 years ago on my TV shows. But you have a lower low, higher high here. You're still running. You're running the Bollinger Band. That means you're getting that Gorilla Glue trade. That's a sign of tremendous strength. But let me ask you a question. You buy it. Where do you want to put a stop? If you tell me at the last low at 43.05, that's 150 points. Are you going to risk $7,000 on a trade, for example? You do it. I'm not. I can understand buying on the break when you have the slow stochastic. The problem is, and there is a problem, every day it's making the higher high. It's not giving you the chance to come in on the break. Goodbye. I'll trade something else that I have control over. And, I'm thinking back to last summer at this time. I left, I think, in June, and we had gasoline on at that point. I think it was gasoline. It was a $20,000 futures contract trade. Trades come, and there's others that you don't catch. The name of the game is I don't want to risk that kind of money. If you catch these trades, they're phenomenal when you catch them. I didn't. Okay. I'm also not short. That's even better. I've had orders in the buy. The market doesn't hit them. And then it goes up, makes these higher highs, and I can't chase that type of activity. The Dow's getting pulled along. The Dow 30 are not the AI stocks, and they're not this. Rising water lifts everything. All boats go up, including the Russell. And I already see all these guys, I'm moving my money out of the high flyers. Now, I saw it this afternoon at 5 o'clock. I'm starting to pull the money out. I've got some of those that are in there, and I'm buying some of the Russell. Okay. What I've learned over the years is that isn't how it works. You stay in the ones that are working and you avoid the ones that aren't. That's how it works. In the T-bonds, I'm not a bear anymore, okay? And the market's having a hard time. It's going sideways. It's not falling apart. Why am I not a bear? Because I am convinced that the Fed has very few cycle hikes left, and they'll affect the front end of the market, not the 30-year bond. So I think this market has seen the worst in premium yield. And I think, if anything, I'm looking for where that inversion happens. I'm not trying to pick it. Don't get me wrong. I am not a top picker. Right now, I expect that the 210 continues because the Fed has to power it, the 2, down to the 1 year, down to the 30 days and all that. That's where their power lies. In the 5 year, you can see you lost the ability to embed. The market hit its Bollinger Band. Cover the name of the chart and stop thinking. Do you want to be short after you hit a Bollinger Band? No, especially if you're not embedded. Dollar index. You're not embedded. You're under the lower band. First move under the 100-day average. Let the other guy carry the risk in this trade. I'll have the opportunity. I believe that the dollar has made a peak. I prepped you for it all last week. I said, I don't think this dollar is going to keep going up. And I was right. What is going up is the euro, but I would never, I want to make that clear, never tell my client to buy over a Bollinger Band. Not going to happen. 5% of the time it stays over it and you're already overbought and not embedded, you own it. I don't want to own it, but I also don't want you to sell it. Don't trade it. There's a full difference. The market is making a statement. The market is recognizing that they're going to keep raising rates. We're going to start dropping them, and the shift has taken place again. You just had us make the decision yesterday, them make it today. You'll have your chance in these trades. In the British pound, tomorrow's your meeting. And not tomorrow, the 21st. Tomorrow's the Bank of Japan. That's their meeting. They're expected to stand pat. I trust nothing, but that's what they're expected. Would I ever tell a client to buy over an upper Bollinger Band? No. I know you will. I wish you the best with it, but I'll build my Vegas casino off the guys that buy off of that because the market's going to pull back within it. I didn't say it's going to top and do this. That can happen on its own merit, but you are overbought in an uptrend going into an event that's widely expected. Buy the rumor and get out on the fact. I didn't say sell short. I said get out on the fact. Bitcoin. Bitcoin doesn't want to stay under the lower Bollinger Band. It's that simple. Okay, does it mean it can't work lower? No, it can work lower. This is still an oversold market in a downtrend. You're about to try to get a crossover where the 18-day average is going to go under the 100, and that should add more downside pressure to the market. When we look at Brent versus WTI, all right, it looks like it might have peaked up here in the market, backing off a little bit. Here it is the market. What do you think I said to you the other day? What do you think I'm telling my clients? My clients are hearing from me, no, you got to cover your shorts. Now, I'm looking to be what? Friendly the market down here for a little bit. Why? Well, we still have that 1 million barrels a day coming in July cut. Don't forget that. That is going to happen. And we don't know what the Saudis will or won't do, but I don't bet against them. Number two, if the stock market's running away in the world and people think that everything is good in the economy, well, why would this fall apart? Got to think this through. So is it time to be bullish? More bullish than bearish. Take out the lows right here of today. Then you got to rethink that. Just listen to me. Here's the market. Here's how you come in. You come in today, you make a lower low. Now you took out that. You got your outside day up. If you take out in the next 48 hours today's low, which was 72.91, then I'm concerned. Barring that, you could get a pop in the market. You've got a higher low, higher high pattern that's developed for you. If we come to WTI, is it doing the same? It is. So these red arrows I'm going to take off tomorrow. You actually have now higher lows, higher highs, but you need to prove you can close over 70.95. And you want to look on the weekly charts and see where the market's at into its key moving average, okay? And I'll do that over the weekend with you. Gasoline, this is it. You're on your way in your July 4th holiday. So barring this being taken out, right there, I'm looking for the Bollinger Band to be hit. I think the demand for gasoline is now here. And remember, it's not you motorists that pull into the station. The gas stations are doing the buying. Right now, they're the ones placing the orders and saying, hey, this is what we're going to need. And they're listening to AAA, and they're getting their ideas from it. Nat gas. I said the first hot weather we get, you'll get a rally. Are you paying attention to Texas, Florida, Alabama, Georgia? I can go on to the states. The whole South, that whole region is now burning. 103 in Naples today. Naples, that's a hot weather day in Naples at this time of the year. So we're getting unusual heat. I wrote in my newsletter that the Texas grid is being tested. They might be getting demand that they've never seen before for electricity because the heat's going to be so extensive. So you watch all this, you put it together. And the thing is, you have the ability to see me in the mornings right here, the way you're watching me. If you take a look, if you're watching me off YouTube channel, look on your bottom. You see that blue button? Click it. You can watch and see what we do. It's really that simple. Because at 7:30 in the morning, well, actually, let me start this the right way. At 5:30 in the morning, I already have begun recording, typically around 5:15, my morning futures update. I review 40 charts. I'm posting by around 5:30 in the morning so that it can be viewed by 6. It takes about 15 minutes to record, 15 minutes to render, and then it gets all posted for you. So I'm giving you approximate times. Then at 9 o'clock, I'm doing the ETFs with it. So you're getting the futures, the ETFs, individual stocks. I'm going to give you fundamentals, technical analysis, where I think you buy, where to sell. We get aggressive and we pull back. It's both sides. I'll talk about weekly charts, daily charts. And here's the beauty. I'm now starting to track for you any mentions of weekly recommendations. I'll track them until they're closed out. I do that every day in these videos for my subscribers. That I'm able to do. These are not available to the general public. You got to be a subscriber of mine. So how do you get this? It's so simple. You move your clicker right up here. Give it a click. You can click, as I said, on the bottom if you're watching me on YouTube. That'll take you right where you've got to be. And there is an and with this, you can also go to our website at iraepstein.com and go to the word research. Just give it a click there. You'll see, and away you go. I'm Ira. I will see you over the weekend. I will put out your weekend editions for you. I don't know if I'll do them yet on tomorrow or on Saturday, but it'll probably be one of those 2 days. Remember, we're not open for you in Spider ETFs on Monday, so I have time. It might even be Sunday. I've got time to get it done. You have yourselves a great holiday, a great weekend, a great Father's Day to all of us, and I will talk to you at that point. Take care.